All right, so I just want to go over some order flow from what is this? This is October USD JPY, but these moves like this sort of thing plays out over and over, and I think a similar thing might be happening now. So I was testing this. Um, so right here we have obviously this long term. The market had been bullish, and then we have this strong push to the upside right here. And what this did is this invoked long orders. This gave people the belief that, all right, the market's going higher, so they all started buying right here. And as they started buying, ultimately, they put their stop loss orders right here. So you can see those levels. It's like people were all in a frenzy about buying right here, and that just gives the institutions the cheapest prices to actually sell their positions. So they put their stop losses right here. So the market invoked them to buy in, and then came through, stopped out, stopped out. So they took the liquidity on the other side of it. The people who sold right here made profit off of everyone who was ultimately swayed by the market to jump in right here. And then from here, because this is always what's interesting about these like high volatility moves, there's always an opposite pullback that ends up happening. So right here, everyone is trying to sell, right? It's the opposite. You have a bunch of people that got stopped out, and the people that missed this and see this are just trying to sell frantically, and they're putting their stop losses right here in the same exact region. So the market comes in, and now everyone who's selling it's coming and taking their stop loss orders. So in that one swoop, they effectively cleared the board. And this is about when like things started to reverse direction too. So the reason for that, they wanted to sweep the market as high as they could to grab as much volatility, as much liquidity as they could, so they could then take the market and take it in the opposite direction. They obviously want the best price, institutions, right? They want the best price for the stock that they are buying or selling. So they want to push it as high as they can, and who's going to sell it to them or who's going to buy from them if they want to sell it? They have to make the market participants believe the market's going to go long, so they will buy shares from them when they want to sell their shares. And then they do this swing, they swoop the board, this move right here. So this is something really specific I'm noticing, that it's always going to come back. Everyone thinks like, oh, this is a significant low, because there's a lot of people that were thinking, okay, this is just something that this is liquidity taking for the long side. And right here, that proved to not be true, because we had this level, volume taken right here, and then we had this level, right? It's like we're holding resistance right here. But it's when it came down to this, and we cleared the board officially. So this got everyone to take an action. And then there were people that were still here. A lot of people had pending orders, or a lot of people had their stop losses from up here. Put it right there. So this is working the opposite side of the market. This is the shop window. It's all about looking at what's happening and how that's invoking the 90% of traders to actually act on the market, right? Institutions, the 10%, the people that are really making a lot of substantial profits from this, are understanding that the market has to work in a certain balance. If it wants to go short, it needs to take liquidity from the long side. Likewise, if it wants to go long, it needs to take liquidity from the short side. All right. So understanding these balances. Either way, hope you all have a wonderful day. It's a little bit of technical analysis, and happy trading to you. Peace.